Hello, everybody. Happy Monday. Thank you for tuning in to Think Lab number 14. We've got some special guests on today. We've got two platinum lenders from Bell Bank. We've got Mr. Brad Goulet. Hello, Brad.
Hello, Mike. Thanks for
And
having
we have his partner, Mr. Stig Sandell. Hello, Stig.
Pleasure to be here.
Yeah, so we have been asking guests to come on and discuss different things. And one of the things we deal with as realtors all the time is what's the rate? How's the market? I'm going to wait to buy a house. I think the rates are going to come down because yada, yada. I mean, everybody is just, they know everything about economics and how to time their house purchase, don't they? I'm being snarky.
Well, I think everyone's got their opinion, and I think it's good that people have opinions and people are paying attention to what's going on, and everyone sort of digests it differently. So yeah, I think just the fact that people are paying attention to the economy and what's going on with the rates, I
Yeah.
think that's great for our business. More people should keep an eye on things, but we certainly have got our opinions on it, and we've got internal experts here, and we follow other experts, and so yeah, we try to get as much information on it as possible.
Well, thanks for taking the time to join us. We've got Dominic, and of course, we've got David Lilja. And so, why don't we start out, guys, by having Brad and Stieg kind of introduce themselves and what their philosophy and how they work with mortgage people and realtors. How about that?
Perfect.
Excellent.
Excellent. Well, yeah, thanks for having us, Mike. Gosh, I've done it. I've done lending since 2001. Stieg at one time was my boss. He hired me. Stieg had fancy cars, and I said, "Hey, what do you do?" And somehow he convinced me to get into lending. I kid. I still don't have a fancy car, but no, we've done it since 2001. Time flies, and Stieg's done it since 19.
Uh, Prior to that,
Prior to that,
in
yeah.
the
It's a trivia question. Steve looks like my son, but he's older. But I've been yeah, he's
In
been
the
an
early 1980s was when Stieg cut his teeth
yeah.
in mortgages.
yeah, I after I left the band Wham, I I started mortgage banking, which was my true passion. But anyway,
But yeah, I mean, every day when I come to work, it doesn't feel like a job to me because I don't know, we like you guys, we love helping people. The days fly by. As to your point, Mike, some people we deal with are economists and they do follow the market, but the first time home buyers that maybe aren't in the business, I think all five of us or six of us, five of us, excuse
Yeah.
me, take for granted what you, after you're in the business for a while, kind of what you see and know, and you think everybody else is walking around thinking about home sales, mortgages, but that's really not the case. They do when they need it, when the iron's hot and they need you on a Sunday at 1 o'clock, right? And they're not peer-approved, which is fine. We approve people on nights and weekends and all that good stuff. But um, yeah, my point being is we all get in this little real estate mortgage bubble. And I think we forget that most people don't pay as great attention to it as we do.
Right.
So
Right.
we're not, people call us salespeople. We're not really salespeople in our opinion. We're like you. We're just we're giving them the information, our 2 cents, and then yeah, hopefully they buy a house, whether it's tomorrow, today, or in a year from now. We know if we do the right thing for people and give them good advice when the time is right, eventually they will come back to us. So to answer your question, I guess we're in the business to help people. And when you do the right thing the right way, it just I don't know, the years have flown by, I guess is what I'm trying to say.
So, a question for you. Can you guys explain the difference between what Bell Bank does, how you source mortgage products for people, as compared to maybe a big bank?
uh,
I mean, you are a big bank, but you guys are a mortgage broker as compared to, is that correct?
uh, well, you're on the right track, Michael, and but no, this is a great question, and it's a big misconception within the industry. But just to give you a little perspective, so Bell Bank, yes, we're a big bank, but we are privately held. We're owned by a family in Fargo.
Mhm.
So we're not the big, big box retail bank. However, we are the biggest mortgage lender in Minnesota, and it's not even close. I think the number two lender does half as much volume as we do. So our bank is really based on residential mortgage lending. So that's our business model. And that's one thing that makes us different. The other thing that makes us different is we dedicate a lot of our portfolio. In other words, our depositors' money, when we take in their money on deposit, we need to deploy that money to make money. So if we take money in at 2%, we lend it out at 5%, and that's how we make money. And a big way that our bank does that is with residential mortgage lending. Other banks might do it with commercial loans, retail loans, something else, but we here at Bell, our biggest portfolio product is residential mortgage lending. So we've got an enormous offering of unique and special programs that you can't find on the secondary market. By secondary market, we mean Fannie Mae, Freddie Mac, and basically the secondary mortgage market. And the secondary market is where most mortgage brokers go to sort of connect a borrower with a lender, and they're just they broker that transaction. However, we at Bell Bank, we're bankers, and the difference is we have our borrower and we lend them money, and we retain 95% of servicing for all the loans, and we do have the capacity and the ability to broker a loan to someone else, maybe a Citibank or a Chase Bank or Bank of America or something, if they're running some sort of special or they've got a unique program or something like that. So we can broker it, but for the most part, we bank the loan, we hold the loan, we service the loan. If Michael Stanton gets a mortgage with Bell Bank, he comes into Brad and Stieg, and we're the one who you ask your questions to and sit down. You don't pick up the phone and call somebody out in North Carolina or India or something like that. So does that answer your question?
Yeah, it does answer my question. And the other thing that I have learned is that you're not only the largest mortgage lender in Minnesota, but Bell Bank is one of, if not the oldest mortgage lender, period.
Can I say it, or do you want to say it? This is my
Yeah,
favorite
this is
stat,
Steve's favorite
just
stat.
because
Am I right?
it's actually older than I am, which is outstanding. It's
Yes.
Bell Bank was actually Bell Mortgage was founded in 1880, and Bell Mortgage wrote the very first mortgage loan in Minnesota in 1880. And so we've
Yeah,
been
that's
doing
awesome.
it. To answer the obvious question, no, I did not write that mortgage in 1880. Somebody older than I did, but
Well,
yeah.
one of the things that I have learned to appreciate over the time working with you guys is the the borrower really appreciates the fact that their mortgage is going to stay with Bell.
Yeah.
And I've had many people ask me, is it going to get sold? I don't want it to get sold. And I know that when they talk to you, that the chances of it getting sold are virtually minimal.
Yeah.
Yeah, and just to elaborate on that very quickly, I'll tell you that we're the only bank over $10 billion in size who, when you call the mortgage servicing department, you don't, a real person picks up on the, you don't get a, hello, this is Bell Mortgage, press one for escrow, press two. A person picks up, it's like you're calling the local bank. So and we take a lot of pride in that, and that's a big selling point for us. You never get the press a number to talk to a person. It's a person who picks up the phone from the first ring. So yeah.
Can you guys walk us through, like, what percent of your deals are agent leads coming in? How much is it repeat business? How much is it of other lead sources? And how much of your business is repeat people? So if you gave Bob and Sue a loan 5 years ago, how often does Bob and Sue come back to you?
Great question. a lot of people think that people walk through the doors and come to us. We don't really get any business from the bank. I would say 1 or 2 a year. We get a lot of our, I would say 40% of our business, Dave, is repeat business, past customers, having done it since 2001. I wish we had the systems we put in place 7, 8 years ago with CRMs and all that, but the repeat customers, I would say, is about 40%. But the rest of it is self-sourced, and we track it every year, who the deals come from and where they come from. And
Mostly realtors.
yeah, the other 50%, 40%, I would say, are agents, realtors like yourselves. And then when I keep track of it, the other 20%, what I would just say, random people you've known over the years. Maybe they're not past clients, but whether you coach their kids or you've been neighbors, just our own personal sphere. So.
And it's funny, we've actually been, as Brad and I have been spreading our social media wings here.
Oh, and have you ever?
Wow.
Have you ever? Oh my
We have
goodness.
been, Michael, and we,
Yes.
so if you've been annoyed by some of our posts or whatever,
I would not say annoyed is anywhere near the adjective that I would use for your post, but we talk about we talk about social media on our podcast a lot.
Okay.
And what is your experience with social media in terms of what has it done for you because you guys have become extremely dedicated to consistent social media posting and the creativity is off the hook.
Well, thank you, Michael. Wow, I'm filled with love right now.
Oh,
No, really, to be in all honesty, social media is something that, as an elderly loan officer like myself, I had to
yes.
sort of grit my teeth and embrace it. But as my children taught me about it, and Brad's children, um, we love it. It's something we love to. We've got a creative side and a sense of humor, and we love to kind of show that on social media. And it's funny, it actually works. I mean, we've had people contact us. Not because their realtor told them to, not because their financial planner told them to, not because their neighbor told them to, but because they saw us on Instagram. And that blows my mind.
Well, because that's because you were dressed like the lead singer from Poison.
Well, you're talking about, God, I just saw him in Brett Michaels. Yeah. Quick trivia. I was in the front row at the Brett Michaels show at the Myth in Maplewood, and I actually high-fived him while he was playing Ride the Wind. And if you're a Poison fan, you know that song. But anyway, but I'm glad you picked up on that. But no, we love social media. It's been fun to sort of integrate that. And we've got some great people around us that help us implement that. And we love it. And it's been fun. It's been successful.
I guess the big take. I'm sorry. Go ahead.
So a follow-up and then kind of see what Dominic has. We typically don't give you guys questions ahead of time, so this might be kind of a grenade being thrown at you. But last week, what was that?
I have to get up and use the bathroom.
No, they can take it. Tie him down.
So last week, Rocket buys Redfin.
Yes.
And if I'm a lender, I probably fell out of my chair, and I'm not a lender, but now you have a player who is mortgage, and if your numbers are somewhat right, 50% of your deals are coming from agents. What does that do to your guys' landscape? Not necessarily in a negative way, but do you see other lenders buying a brokerage? I mean, there's a lot of thought that Redfin will get out of stuff, create more of a welcome environment for other agents, maybe get out of the broker business. But do you mind sharing what your thought was when you heard that?
Yeah, when I read it, I thought, well, what a great idea by Rocket, right? That's a great idea. They can integrate, and I could be dead wrong in this, but we don't. I mean, when someone comes with a Rocket quote, we're like, oh, thank goodness, this is easy, right? There's new. I mean, you all know what. I mean, if we deal with 10 people that have Rocket approvals, 1 or 2 of them don't have issues, but we just hear, like you do, unfortunately, all the issues that come along with it. So maybe over time, whether, I don't know if that's gonna be 6 months, 6 years, or 60 years from now with all the AI and the evolution of technology, they might take over, but boy, I don't think it's gonna be in our careers just because without a capable, caring human being involved, things just go sideways, just like FISBOs do with you guys. So Rocket and Redfin to us, they're just problematic, and our customers, whether they're a first-time home buyer buying $100,000 house, $150,000 house, or someone that's buying a $5 million house, they generally, the younger generation might start dealing with them, but then something goes wrong and then they get pushed to us. So it doesn't really affect us immediately. And I don't mean to be short-sighted in my thinking, but we do compete with them, but not on a daily basis. It's very infrequent.
Yeah, I agree with that. I think there's a room in our industry for that sort of online immediacy and sort of sterile relationship like that. However, and some people love it, and I think it works for some people. However, I think if someone is really serious about buying a home and really figuring out the best way to structure the transaction, you really can't get that at least right now from a call center. No offense to anybody who maybe works there or anything, but I'd much rather work with a realtor who's been doing it for 5, 10, 20, 30 years, rather than someone who's answering phone calls and just kind of reading from a script. So
I had a Redfin agent this weekend accept their approval letter because it was Bell. So I'm sure they're not integrated with Rocket yet, but even the Redfin agents know.
Yeah. But we've seen some of the bigger banks sort of shift their model to similar to the Rocket mortgage model, where they get rid of their retail Brad and Stigs that they've got sitting in their bank, and everything goes to a call center. And they've got people there, and it's, to be honest with you, it's a really profitable way to do business for them. They don't have to pay their loan officers very much, to be honest with you. They just try to automate everything, and that's good for them. I might buy stock in a company like that, but I'm not going to do business with them. So there is a place for that, and maybe it's 5, 10 years down the road when I'm long retired. But for now, I think they're working the kinks out of that whole process. Maybe it'll be great in the future, but for now, I think people really still need Brad and Steve, at least until my kids are through college. And then maybe after that,
Hey,
You can automate it away. Yeah.
Dominic, do you have a question? Otherwise, I can ask one other thing that I know that would be a good thing to highlight with them, as long as we have them on with us.
I do have a question, but you go ahead, Mike. I don't want to.
One of the things that I wanted to bring up is Brad and Stig, if you could educate us and the listeners about the special programs in mortgages that you specialize in. You do VAs, I know that. You do a lot of first-time home buyer and first-generation home buyer, and I know you're very equipped with all the different programs in Minnesota because I've taken the CE class. So I'm wondering if you can talk about that.
Yeah, sure. We've only been at Bell for 8 years now, and we were at another bank for 15-ish, give or take. And when we were a privately owned bank that was back then that was sold to a publicly traded, and they wanted us to stay, but it was horrible in the sense that when we promised something to Michael, Dave, or Dominic, and something didn't go right on our side, we could make it right with a family owned, and publicly traded didn't work. So that's why we came here. But the reason I bring that up is when we came here, we interviewed a ton of different mortgage companies. And when we interviewed them all, what blew both of us away, when we went to Bell's behind the scenes floor or corporate office, there was a ton of people there, a ton of fulfillment, and not everyone looked like they've been up smoking and drinking for 3 days. Instead of having 3 people, there were 300. So my point being is to do twice as much purchase business as anyone in our market, you have to be competitive. We can't be more expensive than anyone, and we have to have every product available. Which, to your point, Michael, we do new construction, we do lot loans, we do home equities, we do a ton of VA, we do all the first generation stuff. Conventional, jumbo, you name it. There isn't a product or there isn't a tool in our toolbox that we don't have, and that's part of the reason we do twice as much purchase money than anyone else. A lot of places will have 60% of those, 50% of those. We just felt it was necessary. When you guys come to us with a need or a customer does, I would hate to say, oh, sorry, we can't do that one product, whether it's a USDA or VA. And stuff like the first generation, FHA, all that stuff, it's complicated, it's difficult behind the scenes. The one thing we have at Bell is, again, a department for, not a department, not for every niche, but for the hard ones to figure out behind the scenes. We have people that only work on those disciplines. That's the difference, in my opinion.
Yeah, so we offer all the top hits, your FHA, VA, conventional, jumbos, but then we get deep into it with like you were talking about first-time homebuyer. When you talk about first-time homebuyer programs, there's dozens of first-time homebuyer programs specific to Minnesota, and more than that, just specific to the metro area, different counties and cities and different areas are funding these programs, and it's impossible for a one-man band to kind of keep all these things to know about all these programs. So we've got internal people that all they do is they work on our first-time homebuyer programs to make sure we're up to date on what programs are currently funded by the bonding and who has money available and that whole thing. So we've got a huge leg up on that. And then we've got our, like we talked about before, our portfolio programs where we could get into lots of different specific niche programs that we do. I won't even really get into it, but if there's a program out there, we can do it, or we've got a vehicle for that.
Dominic?
Okay.
I want to hear what Dominic has to say.
And
Yeah.
to add to that, Steve and I have a team where if you call us at nighttime or on the weekends, we'll probably answer, but if we can't, it goes to our team or an answering service. We work nights and weekends around the clock like you guys do, because I would say 80% of our deals get done on the off hour. So
yeah, we've got a team of 8 people in fulfillment, and those 8 people work only on our loans, only on business that we do. So you can always get a hold of someone on our team. You guys need a pre-approval letter, someone needs a quick quote or something, we can do that really quickly. So I'm sorry, Dominic, I'm taking up your time. I can see you looking.
No.
I want to hear what Dominic's got to ask.
You guys have good information, so I'm listening as a consumer and as a professional. So I appreciate your coming on. My question, I'm curious. Obviously, elephant in the room, interest rates. I'm curious from your guys' perspective. Knowing that like the Fed meeting is this week on Wednesday, how closely do you guys pay attention to that? I know the Fed rates aren't a direct result on mortgage rates, et cetera. But is that just noise to you? Are you paying attention? Like what kind of impact does that have on your business? Especially when people are coming in and saying, hey, I heard, we're going to raise rates again, or whatever the case may be. I'm just curious how that kind of, that market information and those meetings in particular kind of resonate within your business and how you communicate with consumers once that news breaks.
Yeah, that's a great question. And I know Brad's got a lot of things to say about this. I'll just mention really quickly that you talk about the Fed meeting. Is that noise, or is that important to us? Yes, that's very important to us. Yeah, the Fed meets this week, and although there's not expected to be any change in policy, we will be. This is one of the 6 meetings where they release their financial forecast, so their dot plot charts. So we'll be paying very close attention to that, and we'll also, we take the minutes and we dissect those and try to read the tea leaves that they say in the minutes. That they use the word aggressive or very aggressive, something like that. So we try to we can try to get as much information from that as possible. However, you're right, the Fed funds rate does not directly correlate to long-term mortgage rates. Those are set by mortgage-backed securities and basically bonds. So the bond market is sort of near and dear to our heart, and specifically the 10-year treasury. And there's a lot of things that affect the 10-year treasury and the bond rate. And the Fed is a big part of it. Geopolitical events, just the current presidential administrations and agendas and that kind of thing. And there's been a lot of that going on. So we try to take all those little pieces and we like to form our own opinion of what's happening, but we also like to take that information and present it to our clients, to our partners, and say, this is what's happening. This is what typically happens as a result of tariffs or of Fed policy change or anything like that. So we don't want to tell you what is going to happen because nobody knows what's going to happen, but we want to give everyone the information that they need to make an informed decision. It's like I always say, it's like watching before the Vikings game every Sunday. You watch the experts say why the Vikings are going to win or why the Vikings are going to lose. And then I like to take that information and digest it and come up with my own opinion. But that's what we're here to do. We're here to sort of dissect or sift through all the information like that, figure out what's relevant, and present it to our clients and our partners. I'm sorry, Brett. I've been
No, yeah, you hit the nail on the head. We're highly into, we follow it hourly and all that good stuff. And then, in regards to customers, sometimes some customers it just doesn't matter, and sometimes it does. It's more about, it seems like for most customers, can they truly afford it? Is someone that's about to retire in Florida, they're not necessarily gonna put that off for 2 years because of rate. It's situational, I guess. But as you all know, I think it's a third or 40% of the homeowners out there that have mortgages, or they have everything locked because they're all stuck at 2, 3, 4%. We're just now starting to see people that are like, I've waited long enough, I still want to move.
So
I'm sorry.
one of the goals of the podcast that we had was being able to kind of create a library. So when we have a client that wants to know about staging, we can send them the staging link. So one of the ideas of having you guys on is, when I have buyers, I want to send them this link and say, hey, listen to the whole thing or jump in at, minute 28 or whatever. If you could tell a buyer, whether it's first time or maybe the answer is different, being a first time versus a repeat, what 3 questions should they ask of a lender? Because you probably get random calls. You're at Costco, you're at, Culver's, and somebody calls and they're all over the board. I mean, we get those as realtors, right? You kind of know the ones that are tire kicking, the ones that are serious, and how do you get from A to B. But for a buyer, what should they be asking?
You mean what should they be asking when they're shopping for a lender, like trying to decide should I work with A, B, or C?
Yeah, so if we give out your name,
yeah,
and a client calls you or a soon-to-be client, like what kind of questions do you guys want to hear from somebody that's looking for a mortgage?
Well, a lot of times, like you guys, you kind of hear what they're saying, and they'll kind of tell you where they're at. But I'll get to your question in a second, Dave. But right away, after they tell us kind of where they're at, if I'm not really sure what's going on, I right away, and age and price point definitely matters. But okay, have you been employed for 2 years or self-employed for 2 years at least? Do you know what your credit score is? Do you have any money to put down? And how soon are you planning to do this? Just getting answers to those questions. And it's funny, I'll say that to someone and my kids will say, oh wow, you get right to the point. Well, I'm like, I guess we've done it long enough where when they're dealing with you, the agent, it's not something that you wouldn't ask those questions. It's kind of like a doctor. We go right to those personal questions just to see how capable they are. And then once we know they're capable, I guess, and they're then looking for lenders, I always tell people it's like we're by no means doctors, but you want to go to most people won't like a doctor that's, if you're getting your hip replaced, like Mike just did, everyone starts somewhere, but you don't necessarily want someone that's doing their first hip replacement, right?
I'm old. I'm elderly too, Stig.
Well, was that a HIPAA violation?
It might have been a HIPAA violation.
No, you've talked about it on here. So
That's
you,
okay,
Public
but
knowledge, yeah.
but that's okay because Brad's had a couple hip replacements too.
Yeah,
you anti-HIPAA yourself.
yeah, yeah. But someone with a little bit of experience, do they have any Google reviews in today's world and all that stuff? Um, do they like them? Are they pleasant? You wouldn't believe how we get referrals saying, I called so and so and he or she was mean to me or talked down to me. We try and have very good bedside manner, if you will, and there's no lone or person that's too small. Everyone's equal. They want to like the person, and then make sure they're competent, right? We have all the stats to back up our delivery and all that stuff, and being able to close on time. And then lastly, obviously price, right? The internet's at everyone's fingertips. We're competitive, and I always tell people if they are shopping, here are numbers. You get twice as much by being more expensive. If you find someone that you think is $1 less or $1,000 less, like we can always match it. If our rates seem higher, it's simply because on Friday when you talked to me, the rate was a little bit, the mark was a little bit higher, and then rates dropped on a Monday. Well, we're going to be higher, and the opposite could be true too, right? If rates are lower on a Friday and they talk to me and they go to someone else on a Monday, and then we look better. Well, the reality is rates and fees should be similar across the board for the most part. There shouldn't be, it's not like before 2008 when the rules weren't in place to protect consumers as much. Price really shouldn't be an issue.
Yeah, and having said that, at Bell we take pride in we meet or beat any competitive written offer. But when you ask about what three things should consumer ask, I think they should ask, how long have you been doing this? That when I get any of my joints or limbs replaced, I want to know how long has the doctor been doing this? And that's, everybody's got to start somewhere. I had to write my first loan and it was a disaster, I can tell you that. But how long have you been doing it? What's your experience? Because it really matters who you're working with, because that person is going to be your advocate to underwriting and to pricing. And this is the person who's going to put your loan together. And there's a lot of different ways to structure a transaction.
And call the listing agent.
And so you want someone who knows what they're doing. So how long have you been doing it? What's your experience? And then do you have people working with you? Like Brad said, we've got a team of 8 people working for us. Most loan officers are what we call the one-man band, where they do everything. They've got they got to bring coffee and donuts to you guys, and they've also got to keep their eye on the bond market. And most people can't do all that effectively. So you want to see, do they have a good support team, a good fulfillment team? That's number 2. And number 3, are they competitive with their pricing? Because like Brad said, although, most conventional loans and government loans, FHA, VA loans, are sort of set price. I don't want to say set pricing, but everyone's sort of working off similar rate sheets. You do get some benefits when you're working with volume. And if we're the biggest lender in Minnesota, guess who's going to get the best rates in Minnesota? Who's ever, it's like if I sell bananas and I sell 1 million bananas a week, the bananas growers are going to give me better prices on my bananas from a wholesale level. We get better wholesale pricing on our money than most anybody. So, how long you've been doing it? Do you have good fulfillment team, and what's your pricing like?
Reputable, yeah. Reputable, yeah.
So
And
if we were having a first meeting and we were having coffee, one of the questions I would ask you that I ask every lender, and I'm always amazed at the answer, so I don't know what the right answer is. If I have a buyer who buys a $100,000 house, puts 10% down, what does the appraisal have to come back at? Is it 90? or is it 100? And you guys are laughing because you probably
No, that's a great question, and it's one that we get all the time, and the answer is it depends.
why? I don't get that. Why?
So, and this could be an hour-long discussion. Ideally, you want to see the appraisal value come in at or above purchase price.
And
So
that's the
why?
price written on the PA.
Right.
Correct.
So if I'm the listing agent and Mike writes on my house, right?
Yes.
His buyer's 10% down conventional with Bell. Dominic
Yes.
writes, same offer, everything is the same. He's 5% down.
Yeah.
And same, you guys are on board.
Yeah.
If the percent doesn't matter, why does the consumer want to save and do it? Because if they can get it at 3.5, keep money in their pocket. Now, there's a math equation, right? The loan's going to be different, the amount of the principal, stuff like that. But from a seller standpoint, why do we care? Why do we care if it's 20, 10, 5, 3.5?
I'll give you my 2 cents, and then Brad will give you his.
Are they going to be the same though? That's the question.
Well, maybe.
Maybe. All right, go ahead. I'm ready.
Okay, so if someone writes, so if you got a house listed for 100, someone writes, I'll pay 100,000. I'm going to put 10% down. Um, and they're doing conventional finance, 10% down. Well, and say they don't care what the appraisal comes in at, because sometimes an appraisal could come in low and the buyer gets cold feet, blah blah blah. But say they don't care. So if that person who's putting 10% down also qualifies for 3% down, then the house can appraise for as little as what would that be?
6.5.
95%, whatever 90,000 is 97% of. Because they can do 3% down, and it's based off the appraisal value or the purchase price, whichever is less. So they've got a little more wiggle room. They've got more headspace there. If
They
someone,
don't have to come up with the cash. They could increase their loan,
yeah, and
decrease their down payment.
and if you've got an offer right next to it where someone's buying it for 100,000 and they're already only putting 3% down and they've got no other cash to access, no gift from a rich uncle or something like that, then and the appraisal comes in at 97,000, well, guess what? They don't have any wiggle room. They're, you know, they're they're kind of out of luck, because then they either have to try to get you to lower the price or go find that $3,000 under a rock somewhere. So it does matter in that sense. If you're selling a house and you think, oh geez, I'm surprised someone's going to pay me 100,000 for this thing. There's no way this is going to appraise. Then you might want to think about that. Now, having said that, and before I shut up and let Brad talk. By the way, Brad dressed in green for St. Patrick's Day. How awesome is that? We love it. But
Such a politician. I just have my traditional.
I was just going to say, having said that, in this market, I can't remember the last time we had an issue with an appraisal value.
Yeah.
And that I think that a lot of that goes to who we work for and the quality of partners we use when getting an appraisal. And the other thing is, we're seeing a lot of property inspection waivers, a lot of PIWs or appraisal waivers granted by Fannie Mae and Freddie Mac. And here at Bell, if we get those, we utilize them. Not every lender will utilize them, or maybe they'll only utilize them if someone's putting 30% down or something like that. But we take full advantage of those here at Bell, and that could be a big reason why Brad and I anecdotally have not been seeing any. I can't remember the last appraisal issue we had. But anyway, I'm sorry. What are your thoughts, Brad?
No, I have the same
Not
answer,
good.
but Dave, I'm curious to ask you, what kind of answers do you get back on though?
It's solid 50-50. You're the first one that's kind of been right in the middle. We get, no, it's got to be 100 or it's got to be 90. And I don't ever, and I probably ask that question 2 or 3 times a month. And I've been doing this for 14 years, 13 years, something. And I ask that question a lot because there's so much about I think there's so much about this process, whether it's title, whether it's lending, whether it's inspections, whether it's what our role is. I think there's so much that people are confused about. And sometimes it's really easy from an agent standpoint to say, what do I care? I just want the deal to go through. The consumer, well, what do I care? And I always wanted to go deeper. That's kind of my personal, like I want to be able to explain it, but if I can't make sense of it, that's where I struggle. And we had something similar where we lost out in multiple offers because our buyer had less down than the offer that they took. And they could have gone higher, but elected to go lower. I mean, that's a different topic. But I think part of my frustration is there's not a lot of these dialogues, right? And the consumer, we're only 14 episodes in. I don't even know what our consumer base is yet. But Dominic and I listen to a lot of the national podcasts, and the topics they're talking about, I just think are so fantastic, right? And the more we can educate the consumer, the better they are. Um, and I think at the end of the day, what we try to tell people, if it's not right for you, it's not right for us. And, we walk away from deals, we push deals through, we try to be creative. But it's such a vague answer that, in all honesty, it irritates the shit out of me.
And
That we can't get an answer straight to be able to walk it through, to advise our seller,
mhm.
to advise a buyer, or to understand certain parts.
And if I could just add to that, Dave, and I feel your pain because sometimes it feels so sort of nebulous and it's different on who you talk to because honestly, different lenders have different guidelines that surround that and that they have to
Right.
however, we try to when we have a situation where we know we're maybe in multiples and we've got a lower down payment or something like that, but we've got wiggle room because the our buyer might have some cash reserves that could be accessed, blah, blah, blah. We'll call the listing agent and say, okay, Dave, we're making this offer. These clients are solid. We've underwritten everything. We're all ready to go. We can close in 20 days, whatever. And I know it's at 5% down. However, borrower does have, and of course, we can only disclose what the borrower will allow us to disclose. But if we're advocating for that borrower, we might say, we're writing it as 5% down because we're going non-contingent. They haven't sold their house yet, but we've got access to other reserves. If the appraisal comes in lower, we're fine with that. We want to add, what's the word? We want to solidify that offer, make it present as strong as the offer as possible, even though maybe it might look like, oh, geez, these people are reaching to get this house. We like to say every loan, every situation is a snowflake. Everything's different. Everyone's going to have different reasons why they're putting 5% down or 10% down, where the money's coming from, what program they're using. And we do our best to educate not only our clients as to why this might be the best option, but also the listing agent say, this is why this loan is structured this way, or this transaction is structured this way. So you're not just, oh God, I hope the appraisal comes in, and if it doesn't, I don't know what we're going to do. We set the expectations and plans.
But you know what, guys? At the same time, too, as realtors and Dave and Dominic, it's like that's why, I'm always having this conversation with the sellers about putting their property on at market or a little bit under because we don't want to be pushing things. We always talk about appraisals and same thing with buyers. If there's certain things that you can't control. If all you can put down is 3%, that's all you can put down. That's all you can put down. And if you get beat up by somebody that comes in at 20%, that is beyond your control. So in a lot of ways, it's kind of like the lenders, it's a depends answer, but in a lot of ways, with the realtors, it's a depends answer for us too, because there is no black and white, this is going to work all the time. Which is why I think it's really important to have a great relationship with your seller and your buyer, but also a great relationship with your lender. Um, so,
And an intimate, friendly relationship with the lender.
well, let's just, yeah, friendly.
Okay, okay. We'll go with that.
Hey, can I ask, can I highlight one other thing for listeners that might want to know about this? Or are we out of time?
It's your life. You go, buddy.
It's
You're
your
the
life.
birthday boy. You get to
Oh my gosh, it's my life.
I could have days, right?
So,
You're the one with the fake hip, Michael.
oh, I have two. I got a matching set.
Oh, nice.
Okay,
Bionic
so
realtor.
I want to ask you about the approval process because the average age of the home buyer now apparently is like 36 or 38 for the first time home buyer. Are you seeing them coming in to talk to you? Are you seeing them only interacting with you over email? Are you seeing them only interacting with you with your app? Because Brad sends me his app a lot and I copy and paste it and I send it off to the buyer. So, what's the best way and most common way to interact with you?
For sure. So when we get introduced to someone, I try to meet with people. A lot of people won't, but at least try and have a phone conversation, offer a Zoom. We just feel like once they meet us, just like seeing you guys today, your faces. An hour ago I didn't know Dave and Dominic, but now I have a much better idea
Both.
who's who and all that
That's
stuff.
right.
So we've tried, but a lot of people with the phone conversation. We'll always offer an over the phone application if they want. But most people will go to stigsandell.com, bradgoulet.com, and we tell them once you go there, put in all your info. Within 10 minutes, it's done, comes right back to us. Most people don't come in and meet with us just because it's convenient. Friday night, true story, I was pumping water off my pool or whatever, and a gentleman called me. He was retired, and
Older than me?
yeah, he was retired. He didn't know how to do the app. It was difficult for him. He didn't do it a lot. So I talked to him for 20 minutes. We did it together. He applied successfully within an hour and an approval letter. And another hour after that, the listing agent he had both sides. He had an accepted offer. So it can be that quick sometimes within 2 hours. Now you can be approved and all that good stuff just by going to our websites and applying. And his situation was straightforward. Now, if you're an agent and you're self-employed, we would need tax returns and all that stuff and look what you write off. So sometimes self-employed people might take a full day or two. We have an in-house team rule where people are applied within or approved within 24 hours, unless they have a unique situation and they own a bunch of businesses. It might take a couple days, but it can be that easy to answer your question, Michael. Most people apply online and just talk to us over the phone, but
Yeah, and I'll give my 2 cents. So because I've been doing this a little bit longer. So in the old days, I would if I had a client, I'd I'd show up to their house. I'd pull up in my Pontiac Firebird, take off my Ray-Ban sunglasses, walk in, and we'd talk about the loan at their kitchen table. That's how we used to do it in the old days.
It was a neon. Come on.
Dave. I mean, Michael. Actually, my roommate had a neon. Shout out to Nathan Anderson.
That was my first car, was a neon.
Was it really? Those are fantastic. Got better mileage than my Firebird, I'll tell you that. I used to sit across the dining room table with people, and that's how we did business. And now I have clients who I've never met in person. I'll meet them in person for the first time at the closing, face to face. And we can do anything in between that. We're kind of old school. We love to sit down and just talk to people and talk through their situation. However, if they don't have time to do that or they don't want to do that, we can do it all electronically. It's great. So but I don't know if I can say 10% do it online, 10% do it in person, and the other 90% do it on the app.
I wish I could share my screen right now and show one of the Brad and Stig social media films.
Show it, Michael. Show
But,
it.
We'll put it
but-
on the
They
on
find
the
you.
post.
Yeah.
yeah.
Gotta get it on there.
Hey, you guys, thank you so much.
Thank you.
Do you have any other questions, or are we ready to go so these guys can don their bleach blonde wigs for their next video?
Thanks, you guys. Appreciate it.
See ya.
See you guys.
Thank you so
Thanks
much.
for joining.
Thank you guys.
Like and smash the like button, subscribe.
Like and
Thank
smash.
you.
Bye, guys.